Hey, it's Clay Trader, and this will be a video chart on ticker symbol DCTH. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually today's price action broken down into 30-minute time slices. I like to do this time frame. I think that's a good job of telling the quote-unquote story of the price, and then makes mapping out levels of support and resistance a bit easier to see. I did this analysis on Friday, so that's where these red and green line annotations are coming from. And on that note, just going to do a bunch of house cleaning here right now and get rid of these lines up here. Sure, they still pertain to the chart, but they're not really relevant. And from a presentation standpoint, I don't want to have lines all over the place and risk causing clutter and confusion. So I just want to try to keep this as clean as possible. Now, with that being said, the first update comes about from a foundational rule in charting, which states when levels of support are broken and closed below, they tend to act as resistance. So for those of you that watched the past videos, I've talked about 11 cents being an area of support. But now that the price is below it, you would expect it to act as resistance. And that's actually exactly what happened during the first 30 minutes of the day. You can see the price gap down, and then price moved up here a little bit, but it got right around that 11 cent vicinity, and then from that point got rejected right back down. So on any sort of a bounce, 11 cents is going to be that first level to really kind of gauge the health or strength of the bounce. If the price goes up there and is immediately rejected back down, well, then obviously the bounce really didn't have that much strength. But if the price can get up there and start to push through it, well, then, hey, at that point in time, maybe that bounce is the start of something bigger. But as it stands right now, any sort of bounces should be looked at with a pretty skeptical eye until the price can show some true signs of strength. And I'm defining the statement true signs of strength as getting up above 11 cents. Now, what about areas of support? So if this price is going to stabilize out, where are the buyers seemingly hanging out at this point in time? Right now, pretty straightforward. The bleeding very clearly stopped down here at about 0.096. You can see several times this morning after the initial push down, the bears came back and tried to push it down several more times. But to give credit where credit's due, the bulls did a good job of holding strong there. So 0.096, that key area of support going into tomorrow and really the remainder of the week. And then, as we already talked about, the level of resistance up there at 11 cents. So still a lot of eyeballs on this one. But yeah, right now the bears are in total control, and they just keep on pressing the price down. So we'll see if this 0.096 mark can be the stabilization point or not. One of the biggest questions that I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.